So let's talk about the third scenario that we're going to go over today, and that's the transfer of assets. Most likely, this is for people that are 50 years and older. This is usually a married couple that is trying to give the survivor some time to figure out what to do with the house. The second scenario is a single parent that's trying to transfer the asset to their children. So let's build the scenario. We have a loan that is $140,000 and it's a 30-year term. The house is worth $165,000. The situation is a refinance, so they have $25,000 worth of equity in the house. And we know that this can be all the way up to a $165,000 asset, and that's just if the property value doesn't go up. So as we're paying this mortgage down, we're going to owe less, and we're going to be owning more equity in the house. The monthly payments on the house are $1,400. If you take $1,400 and times it by 12, that comes out to $16,800. Let's talk about the financial inventory. The first income in the house is Johnny's. So we have Johnny and we have Mary. Johnny makes $1,100 off his pension and he makes $1,200 off his Social Security. Mary makes $875 off her Social Security. So the monthly household is $3,175 a month. So now Johnny and Mary have paid off half the loan and they have an additional $70,000 worth of equity in the house. Now Johnny passes away. So now Mary's going to lose the $875 because she loses the lower of the two Social Securities. She's going to gain the $1,200, but she is going to lose the $875. Now, every pension's different. Now, most of the pensions that we see are not 100% transferred over to the spouse. Sometimes they can't transfer any. Sometimes they can transfer a percentage. In this scenario, we're going to say that Mary's going to be able to get half. So now Mary's new income is $1,750. But the problem is the mortgage is still going to be $1,400. Mary is going to have to dip into the savings each month to pay the mortgage and all the bills. And I see this situation all the time. I meet with folks and there's absolutely no plan in place. So we've talked about the full payout, we've talked about the partial payout, but for this scenario, we're talking about how important the buying time scenario is. For this example, we're talking about 1 year of protection. Now I've done 9 months all the way up to 5 years of protection. But what we're protecting is the equity. And right now we have $95,000 of equity in the house. That's what we are protecting. And what 1 year does, that allows us to buy time. It allows us to grieve. I was sitting down with a couple here in Texas and I asked the magic question to the wife of what would you do with the house if something happened to your husband? The husband immediately responded with, she's staying in the house. And his wife looked at him and was like, no, I'm not. And they started like having a little bit of an argument right there in front of me. And her whole thing was the yard was too much, the house was too big for her to manage by herself. And they had never even talked about it until I had brought it up. And so she had looked him right in the eye and she's like, just give me 12 months to sell the house. And he, just kind of was taken back a little bit. He turned and looked at me and said, let's get 1 year of protection. And so we got him a policy for the 1 year. What you want is you want enough money allocated to pay the mortgage for a period of time. This allows your loved ones to figure out what to do. If they want to sell the house, your family has enough time to do it. They have enough time to prep the house, put the house on the market. If they want to refinance the house, they have time to figure that out. Whatever they decide, they have time to do it. Remember, the bank doesn't need the remaining balance, and in this scenario, that's $70,000. The bank just needs to continue to get to $1,400 until you figure out what you want to do with the house. So thanks for attending the webinar. Hopefully you gained some knowledge and you found it useful, and maybe one of these scenarios will really hit home for you, and you want to schedule a call, which is the link below. Like I said in the lesson, it is amazing how many families are unprotected and are exposed, and it's just because they haven't thought about it. Lastly, I'll leave you with this. Don't leave your family with a huge debt that they can't recover from. Make sure that they have some protection in the case that something were to happen to you. We are finished. Thank you for attending. That is my email. If you want to schedule a call, again, the link is below. If you like this video, check out some of my other videos with infinite banking, long-term care, final expense, and estate tax, and how insurance can help you with all of these. I look forward to seeing you on the other side. Have a great day.